Okay, so learn to read a Forex chart. This is simple. It's not easy, but it is simple. So that's what my chart looks like. Really, really confusing, isn't it? You look at that and you get a little bit freaked out. Nothing to worry about. We're going to help you trade. We're going to help you, we're going to turn you into professional traders. I promise. Cool. So what we're going to do is we are going to look at the Bitcoin chart, because that is the only chart, one of the only charts that are actually currently trading. Great. So it looks very confusing. Don't have to worry. It's not that bad. I'm going to teach you everything. Okay. So this is what I use to trade. I use the candlesticks, I use moving averages, I use an 8 exponential moving average, I use the stochastic indicator, and I use a Bollinger Band. Those are just the names. So the main moving average, I've got lots of moving averages on my chart, but the only one that I really use is the 8 exponential moving average. The other moving averages are there to show me why a currency is behaving the way it's behaving, whether it is why it has stopped, because you'll notice that the price stops on the moving averages, and it is the most amazing thing to watch. It freaks me out every time it happens. And I think that actually, wow, it's like crazy. It's quite interesting. So my chart is set up in a specific way on my phone. So you download MT4 on your phone, and my videos are for Mac and Apple, unfortunately. It's the same functionality on an Android. You just need to click the buttons to find it, okay? And you can't really break anything on your phone, so don't be afraid to click buttons and learn how to do this. Okay, cool? Okay, so these are the different colors that you set your chart up so that you know. And I've spoken about the 8 exponential moving average. Let's show you. So the 8 exponential moving average is the red and white dotted line, this red and white dotted line over here. The other moving averages I only use just to give me an idea, to tell me when the price is reacting the way it's reacting and why it's not doing anything. And you'll see how amazing it is in the next few minutes when I explain to you what's going on. Cool. Okay, so what is a moving average? A moving average is basically it's the average closeout price of the past X amount of candles plotted on a line. So if we're looking at a 200 moving average, okay, they take the closeout price of the last 200 candles, they add up all the closing prices, and then they divide by 200, and that's going to give you a number, okay? So that will basically put a line on a dot on the chart, okay? The next time frame happens, and a new candle forms, and to work out what the moving average is for that time frame is you take the last 200 candles, okay, add them together, divide by 200, you get a number, and you plot it onto the chart, and then you draw a line, okay? So if we look at over here, this is a 1 minute chart, okay? So the 200 moving average is the red line. That's the 200 moving average, which means that it is the closeout price of the last 200 candles. What is a candle? This is a candle over here, okay? It's that green and red thing on the chart. That's what a candle is. I use candles. Don't use a line graph, and don't use the one with the little pedals. You must use candles. Gives you a lot more information. So what is this 200 moving average? It means that they've taken the closeout price of the last 200 candles on this time frame, okay? The blue is the 100. So it's the closeout price, the average closeout price of the last 100 candles. So this is a 1 minute chart. M1 says 1 minute. So when the next candle forms, the next candle is going to form over here, and then to get the moving average, they'll take the last 200 or the last 100 candles, depending on the moving average that you are following. Are we together? Moving on. Okay. So the moving averages are all indicators, are lagging indicators. That means, okay, it's a representation of what has happened in the past. There is no indicator that's going to give you a predictive indicator. There's no predictive indicators, but when you learn my strategy, you'll be able to predict with a fair amount of certainty between 80 to 95%, okay, of what is about to happen on the price with Forex, and that's going to give you a huge advantage. Now, for the few of you that have been following me in the last week, okay, on the Learn to Read a Forex chart, have I been wrong once? Okay, this is not a gift, okay, that I've been given. It's because I've learned this. I've taken the time out to learn this. And once you learn the strategy, you'll be able to predict the price with a fair amount of accuracy and certainty. Cool. So this is the stochastic indicator. It's another indicator which, when you're going to set up your phone, you'll set it up according to this picture. This is the exponential moving average. So just to explain it to you now, so that when you are setting up your phone tomorrow or the next day, this is the first screen, okay, and your style is red, okay, and then to add the level, you go to levels. This is to get your dotted line, because a lot of people don't know how to get that dotted line. You click on levels, you go to the screen, and you choose white, and then your 8 exponential moving average sticks out, and it's a red and white dotted line. Very, very simple. Cool. So I use the candlestick analysis. Now, the candlestick analysis is a 400-year-old principle. It is not a new principle. Moving averages, Fibonacci's, stochastics, all these indicators that you see today, pitchforks, etc., they have been invented in the last 30 years. It's part of the technical analysis invented by in the Western world, the American world, and it seems to be used quite extensively, and I don't use it. I trust a strategy that is 400 years old, that has got a history of 400 years. Technical analysis, the moving averages, stochastics, Fibonacci's have only got a history of 30 years. So what's better, 400 years or 30 years? It's 400 years. So I've chosen the 400-year way. Strategy was invented by the rice traders in Japan. They are the most successful traders and have been the most successful traders ever, and they carry on to be. So I recommend that you use the candlestick analysis. Now, a lot of people set up their charts. I'll take your question now. A lot of people set up their charts according to the candlestick analysis, not because they understand it, it's because it has a very nice graphical representation, and they don't understand the power in these candles, okay? And once you understand this, it's going to change your life, and you're going to print money. So this is what a candle is, okay? So let's say this is in a bull market. That means the price of the currency is going up, of the instrument that you're trading is going up. It's trending in an upward position. So this is the open price, okay? The price goes up, the body changes color depending on what color you want it. In this example, it's green. This is the close price. During the day, the price opened here, but the price also went down below the open price and then came all the way up to a high, okay, and then retraced back down and then closed over here. So this is the body that was formed of the candle. This is the wick or the shadow of the high, and this is the wick of the low, and the same obviously will be for a market in a downward trend. Now, with currencies and other instruments, you can make money when the price goes up, and you can make money when the price goes down. So normally when you buy shares, you buy at a low, you wait for it to go to the high, you sell at the high, you take your profit. That's how you normally understand making money. With Forex, it's exactly the same in a bull trend, but you can also make money when the price is going down. So it's basically you betting. Okay, you saying, I bet that the price is going to go down, so I buy over here. I know that the price is going to go down. You've sold short is what it's called. And the price goes down. When the price goes down, the difference between the high and the low is your profit, and you take the profit and you keep the profit. Very, very simple, not complicated. There are 15 major candlestick reversal patterns. Now, a lot of people say to me, that's a nightmare. Well, we all went to school, I hope. We all learnt our 12 times table, I hope. And within that, there are 144 different calculations. That's 144 different patterns. So we all learned that, so don't get freaked out. There's only 15. But wait, don't panic. We only have to learn one today, okay? And I only really teach one because it works. The others just give you an indication of when something's going to happen, but this specific candlestick is an indicator trusted over time that the price is going to reverse guaranteed, okay? 99% of the time, and it's called a doji, okay? And it's when the price, the open price and the close price is basically almost identical, forming like a cross, okay? So there are different types of dojis. This is basically one of the only things you need to learn today is the doji, okay? This is the one that we're going to be concentrating on. It's when the price, the open and the closed price are basically the same, so there is no body. So this is a long-legged doji. The longer the shadows are, the bigger the chance is that the currency is going to reverse and change direction. This is a dragonfly when it's at the top, and this is a gravestone when it's at the bottom of a trend. Okay? Cool. So this is not a doji. This is called a spinning top. And a lot of people get confused here, and they make a mistake, and they get out of the trade because they saw this candlestick. They got afraid. They thought, oh, it's very close to a doji. Let me get out of the currency. And they miss out on a lot of the pips and the profit. Cool. So here is the rule. A doji at the top of a trend. So when you've gone long, okay, you see a doji at the top, take profit. Because the time that it takes for a currency to drop is very fast. It's faster than it took for the currency to go up. Okay, so the currency goes down very, very quickly. The currency can trend for about 2-3 days, 4 days, maybe 2 weeks. Okay, and it can take an hour for the currency to go all the way down to the bottom that took a week or 2 weeks to actually get to the top. So when you see a doji, you need to. Thank you. So let's go and have a look. Let's go and look for some dojis. Cool. There's one. There it is. There's your doji at the top. Come down to the bottom. Still in a downward trend. It didn't go down. Didn't go up. That's not a reversal. It's still going down. I'm actually going to go and change. I'm going to change my time frames here to H4. Okay, there we go. That's much better. So here we see. Here's the doji at the bottom. Okay, it's supposed to be a reversal, but it doesn't. Let's look at it at the top because that's what we're talking about. Okay, so let's go to the top there. Okay. Yeah, you can see it over there. There's a doji almost at the top. Here's your doji over there at the top, and then it reverses all the way down to the bottom. So whenever you see a doji at the top, we take profit. So let's go look somewhere else. Let's go and have a look over here. I did see it somewhere. There it is. So it's at the top. It doesn't go up much more, and then it trades sideways for a while, and then plummets. Okay? So there's your doji. Trades a little bit. It's not a lot of pips over here, and then all of a sudden it plummets to the bottom. You do get false positives, and it does happen. So you can see here's a doji in the middle of a trend, and some people get out of the trend, and then all of a sudden it starts going up again. When you do get this false positive, it happens. It's normal. You just jump back into the trade. Yes.
But Alan, I've got doji.
Yes.
Mostly, it doesn't really guarantee that the market is going to turn. But it's telling me that the market is running out of power. Correct.
The sentiment has changed. Correct. So there is indecision in the market. Okay. The bulls don't know what to do and the bears don't know what to do. Correct. So in that, if there's indecision, it means that there's going to be a change of sentiment. That's what it means. Okay. So we need to be aware of that there is possibly going to be a change of sentiment. Now, when you look at it with if you look at it with the stochastic, okay, and the 8 exponential moving average, you'll see that it's going to start making sense in a few minutes. I'm going to show it to you now. Yeah, that's the old thinking. That's the old thinking. Don't worry. I'm going to teach you. Cool. So over here you can see this was an uptrend. Okay, so there's your uptrend. Okay, there's your doji. You get out of the market. Okay, there's your doji at the bottom. You get into the market. And there was a doji. It is a spinning top, but it's very close to a doji. if we go like that, okay, and then it's all the way down to the bottom. So you can see that the doji is a very powerful instrument, a candlestick. If you watch it properly, you'll notice that it is going to help you make decisions. Cool. So a lot of people, when they do see a doji, this is in shares mainly, they go short. I don't like doing it in currency because there are a lot of factors in currencies that you don't get in shares. Like we have political decisions that affect the currency. So I don't like going short, but the rule is that when you do see a doji at the top, you take your profit and you can go short. I don't go short. I wait for the second candle to close, to open below the 8 exponential moving average, and then I know that it is a short, and I will show it to you in the next few seconds. Okay. Cool. So how I analyze before I get involved in trading, I analyze the chart from the highest time frame down to the lowest time frame. So I start with a day chart. Okay. So let's just bring this down a bit. Okay. So in the top left-hand corner, you can see D1 over there. Okay, so if you click on the D1, it drops down a menu, and there are your different time frames. So it's day 1, H4 is 4 hour, H1 is 1 hour, M30, M15, M5, and M1, those are your minute charts. So you always start from the highest time frame first to get an idea of what's happening over a period of time so that you can see like what potentially is going to be happening with that currency. Okay, so over here you can see in the last couple of days it's been trending within a range over there. That's the range. Okay, and if you look left, we always look left to get confirmation of what's happening. You can see that we're very much in a downward trend. So, you know, you can't just open up the chart and say, and look at the last few candles and say, okay, time to buy. Doesn't work that way. You need to look left because history repeats itself, and you need to see exactly where we are with the currency to make an educated decision. Right now, this is a sell. And we know it's a sell because the candles are below the 8 exponential moving average. I believe, and you can write this down, that on Monday, this price is going to reverse. The price is going to reverse. It's probably going to go back up, but I'll check it on other time frames and give you a better idea. And how I know that is because, number one, we're in an oversold position on the stochastic. I don't use the other indicators. I only use, okay, the candlesticks and the 8 EMA, but I use the other indicators to give me an idea of what other traders are doing. You must remember that there are millions of traders out there. Millions of traders just using stochastics. Millions of traders just using moving averages. So the professionals use, I'm talking about the banks and hedge fund managers, they use these moving averages. They use the 34, which is the yellow. They use the 50, which is the purple. They use the blue, which is the 100. And they use the 200, which is the red. And those are your key moving averages that the professionals, the banks, are using. Okay, and then there's other indicators as well, which is the Fibonacci, and then obviously the stochastic, which tells you if a currency is overbought and oversold. So this is a supply and demand thing, obviously. So the price, no. There's hundreds of different indicators, hundreds. I use what works, and this is what works for me. My strategy is not the only strategy out there. There are lots of strategies out there. You've got to work with a strategy that works for you. Okay, a strategy that you're comfortable with, that suits your personality. I'm working with something that is tried and tested over 400 years, and it suits my personality, and I understand it. The moving averages make sense for me, and I'll show you, okay, that why has the price stopped on the blue? Why? That's not a coincidence. Stopped on the blue. Didn't go further. Why didn't the wick? Yeah. Why didn't the wick go past the blue? That's not a coincidence. If you look at all of them, you can see, why did it stop over here? I'll show you another one. They're not coincidences. And you'll see them all the time, but this is a day chart, so it's difficult to see on the day chart. Okay, cool. So let's analyze on the 4-hour chart. You can see exactly what's going on. Ugh, this phone. Cool. Okay, it's trading in a range, but it's sticking on that 8 exponential moving average. It's not by coincidence that it's trading in that range. Okay? So the stochastic shows to you an oversold and overbought condition. Okay? It shows to you, like if something is oversold, like you've got a bag of a truck of oranges, okay, and there's too many oranges being sold, okay, the truck is left with, let's say, a big lump of oranges. We would call that oversold. Okay, there's not enough oranges for the public, basically. There's too many oranges for the public. Are you with me? Okay, so there's an abundance of oranges. So anything between 0 and 20 is in an oversold position. Anything between 80 and 100 is in an oversold position. Okay, but I don't use it, as I said, I only use it to understand why the currency is performing in a specific manner, but I don't trust it. Okay, so we trade in a 4-hour time frame only. I trade in a 4-hour time frame only, mainly because it gives me time to think. And for you, if you're working and you have a job, then obviously you would need to be trading in a 4-hour time frame. It means that a new candle forms every 4 hours. Okay, and you can make decisions then. You don't have to be glued to your screen. If you're trading on a 15-minute time frame, it means that the next candle is forming in 15 minutes and you need to take action. Okay, so if you've got a job and you don't have time, rather trade in a 4-hour time frame. Okay, it's much better. Time is slowed down drastically. Okay, so a doji at the bottom means that the trend has generally stopped, and you need to think about taking profit. I don't normally take profit in a downward trend when I see the doji. Okay, I wait, and I'll show you what I'm waiting for. Let's go to a 1-hour chart. It's too slow here. Let's go to 5 minutes. Okay, cool. Okay. So right now, okay, here are your dojis at the bottom. Tells you that that's the end of the trade, and then all of a sudden, boom, we hop up. So this would be my entry over here normally. Okay, that would be my entry point. The second candle that opens above the 8 exponential moving average, that indicates to me that that is a buy signal. So that is very important to note. It's very difficult to look at it because the moving averages are so clumped together and the time frame is so short that you can't really make decisions here. But what's going to happen here, this is the 100 moving average. So can you see here, it started on the 100. It's now going to come back all the way to the 100 and it's going to stall. So the next candle will form in 1 minute. So we're on 12:02. So 12:03, the next candle will form, and you'll notice that the candle will come down to the 100. And if it breaks a moving average, it's generally coming down to the next moving average. So if it comes down to if it breaks the 100, it's then going to come down to the next moving average. It's going to stay there, okay, for a while. It'll hover in that area, and it'll play within the 8 and the 100. Okay, so here's your doji at the bottom. I'm still staying short. Okay, so we've passed the 50. In my opinion, this currency on Monday coming all the way down to the red. If it's not on Monday, it'll be by Friday. The currency will be all the way down here. It's still in a short. You can see that all the candles are below the 8 exponential moving average. So there's the red. It's below the 8 exponential moving average. So we're still in a short, and we're not going long yet. The only time we're going to go long is when the second candle opens above the 8 exponential moving average. So to work out what the length is of this trade, whether it's like 20 pips or 50 pips or 100 or 300 pips, you can look left and you can see what's happened over history and you can see what's happened over time. So you can see we're right at the top here. So where's it going to go? Okay, we look left, we're looking for a line of what's happened in the past. Okay, so where's the price? There's the price. So where's it going to stop? So let's draw a line. Let's draw a line. Draw a line. So this is called support and resistance, okay, where you look back in time to see where the price stopped in a period and stopped in a band and then traveled on a band like this, okay, and then it broke out into a pattern. So as you can see here, this is where it stopped. It stopped over here, okay, so, and there's nothing holding it. There's nothing anywhere holding it. So I know, okay, firstly, we have broken through the purple. So on Monday, after Brexit, two things are going to happen here. Either, okay, it's going to go above and then go up, or it's going to go down. Now, in my opinion, because we're below, New York closed out, we can't predict it. We just follow what the masses are doing. And the masses are telling us, okay, if they didn't think that it was going to go down more, then why did it close below the 50 on Friday night? They are thinking that it's going to go further down. So on Monday, the next candle is going to either open over there, it's going to open below, and it's going to carry on going down. You'll see on Monday, 2 o'clock in the morning. I'll be awake. Who's waking up with me? Okay, so when you're at the bottom, the rule is in shares, in stocks and commodities, that when you see a doji at the bottom, you keep your profit, you take your profit. So if you're in a short, okay, so you shorted the currency over here, you made all your money over here, there's your doji, you can see the sentiment has changed, okay, straight after the doji, the sentiment changed, boom, and we go up, okay. This is where you would get, this is where my entry point is. This candle, not this candle. I've got to wait for this candle to close. It must close because we know from history that the price, when it's still in that candle is still trading, we know that it can still go up and down. It can carry on like trending in whatever direction. So to make sure that we've made the correct decision, we wait for the next candle to open, and then we get in. Okay, and as you can see, if you got in after this doji, okay, you waited for the next candle to close in a bullish position. If it closed if this candle closed red, I would have stayed in the trade. I would have stayed short. I'll take your question now. Okay, so the next candle opened and closed. Yes, it was a doji, okay, but you're at the bottom of the trend, and if you take a line for resistance, you can see here that you're on resistance and support. So we know that it's not going to go further down. The chances of it going further down are limited. So we use this doji and we stay in the trade and look at the growth that we would have had. And if we did that, I'll take your question now, but let's do that. So we got in over here and all the way to the top left-hand corner, you see the numbers? 10, 12 / blah, blah, blah. So it's 10 / 1987. We ignore the last number, the last digit. That is 197 pips. If you're trading that, that is a lot of money. Okay, that is a huge move. Huge. Okay, just by following the doji. Not even looking at the stochastic. We followed the doji. Did I mention anything about the stochastic? Nothing. Okay, followed the doji pattern. We had the doji. Candle broke up above the 8 exponential moving average. Boom. We went into a bull market. Very, very simple. So let's go back to Bitcoin and we can analyze. And I can tell you why a currency is stalling. Bitcoin is such a horrible one at the moment because nothing's happening. We're not trending. We are in a sideways market. So let's go find out. Let's go look at another time frame and we can see why the currency is stalled. Okay, there you go. That's why it's stalled. So if we go to a 1 hour time frame, you can see why we've stalled. We've stalled because we've hit a major moving average line. Okay, it's resistance. So how I know the difference between support and resistance is as follows. When you're standing on the floor, what is the floor doing? Is it supporting you or resisting you? It's supporting you, okay, that you don't go through the floor. Okay. When you touch the ceiling, okay, is the ceiling supporting you or resisting you from going through it? It's resisting you, okay? So that's exactly what's happening here. So what have we got here? We've got the 50, the purple, resisting the price from going any further, okay, than that. It's stopping it. You can see, like through here. Yeah, it went up a little bit, hit the top Bollinger Band, came down, hit the 8 exponential. That's just crazy. Okay, that it hits the 8 exponential, okay, trades sideways, goes below, goes in this band, the yellow's the 34, and then bumps up again to the 50. This is the 100. The blue is the 100. But it always travels within these lines. Why? Because there are millions and millions and millions of traders out there. This is nuts. So remember when I said to you FBS had 10 million traders? Do you remember that slide right in the beginning? Okay, that's one Forex company, and there are thousands of Forex companies out there. And each one of these Forex companies have got traders. And they have these orders. And their orders are placed strategically on the chart according to the moving averages. So these are not the price line. This is when they want it activated, okay? But normally this is like a moving average, or that's the price, and then the moving average is like here, or the moving average is like here. So when the price gets to that moving average, these orders are being activated. And this is now the reason you'll see like major volatility. I don't know if you've watched my traders, if you've watched just before it gets to the moving average, there's huge volatility. Have you ever noticed that? Okay, do you want to know why? It's because these orders are being activated. Because everybody's putting their buy orders, their sell orders, their buy limits, their sell limits within this range. So let's look at another time frame. Let's look at a 30 minutes. Hopefully the moving averages will be spread out. Okay, so here, this is another reason why it's stalled. It's on the 200. This is a major key reversal point. So check it out. It's obvious. Here it is. The price went up. It hit the 200. It went a little bit above the 200. It couldn't find support when it was above. So it came down. So the price, this 200 line is resisting the price from going up. Okay? And then what did it do? Boom, it reversed. Why? Because here is where your sell orders are. So there are lots of people buying and selling. They've got their orders over there. Sell orders, buy orders. And this is a supply and demand thing. So whoever has the most amount of orders is going to win. So if there are more sell orders than buy orders, what will happen? It'll go down. Okay, so let's repeat that. If there are more sell orders than buy orders, so there are more people wanting to sell the currency than buy the currency, what's going to happen to the price? It'll go down. So if there are more people that will have buy orders than sell orders, what will happen to the price? It'll go up. Okay? So we can't dictate this and we can't predict it. All we know is that we know how to read a candlestick. We know how to read the moving averages. Okay? And then we can rely a little bit on the stochastic. I don't trust the stochastic. I just use it to understand, like, okay, we're in oversold or overbought. There are hundreds of thousands, if not millions of traders just trading on the stochastic. That's all they use. Okay, so when the price gets to here, they buy. When the price gets to between 80 and 100, they sell. It's gambling. They're using one indicator. Okay, not understanding anything else. That to me is like really gambling. Okay? The reason a lot of you are losing money is because you're entering in the wrong place, and you're putting your take profit in the wrong place, and you are putting your stop loss in the wrong place. That's the major reason why you're losing money here. Okay? You need to give yourself a chance to make money. So where would you put if you're in a short, where would you put your your stop loss? I know exactly where my stop loss is here. I'm in a short. I've shorted this currency. This is Bitcoin. Okay? Hypothetically. Okay? Where would you put your stop loss? Right now, you've just entered the market on this line. Where is your stop loss? Where? This is your resistance over here. So where's your stop loss? Where? Tell me when to stop. There. Okay, so I wouldn't put my stop loss there. Okay? Because you're not giving yourself enough room. That's where my stop loss would be. The top of the last candle. between 20 and 30 pips, so I can at least last in the trade.
But then I'm afraid that that isn't really going to take too much of my money if I what is happening to sell out.
Then you're losing too much of a big, your lot size is too big.
I think now we'll take a more look at what
Exactly.
Yeah.
But I mean, if you look here, okay, I'm on a support resistance over here. So and I'm in a downward trend. So the chances of it going up, okay, are limited. They're limited. I'm in overbought, almost in overbought over here. I'm in the 80, okay. I'm already in a downward trend over here. Okay, I've hit support and resistance, okay. It didn't go much above that, so why would I, it's not that much of a risk.
But then, Ellen, that's what I'm saying.
Yeah.
Your earnings, I don't know whether the market is a downtrend.
But you can see it's a downtrend.
Because it's a bit of
You can see it's a downtrend.
yeah,
Okay. If you look past, you look in history, you can see that we're in a downtrend. Plus we've hit, okay, the support and resistance over there. The chances of it going up is limited. Okay, so let's look at another time frame to make a better educated decision. So there's the 15 minutes. Yes, we're above over here, okay. You're talking about a 4-hour trade. Okay, so I can't look at it on this time frame. So let's look at it on a 4-hour time frame. So there it is. Where are we? We're below the 8 exponential moving average, which is the red one. It opened below the red. Yes, we're in a sideways movement over here, and most of it has been below the 8. Okay, but we've opened below the 8. If it goes up, which is possible, this is where my stop loss is, and it's definitely going to carry on going down. The trend is your friend. You never trade against the trend. If the trend changes, okay, then you can obviously go within the trend, and you only know that it's changed if your next candle forms above the 8 exponential. So this candle closes here, above the 8, and then your next candle opens above the 8. Then I know that the trend has changed. I'm going to get into that trend as a long. Have I answered your question? Are you sure? Okay. Any questions? I know this is tough. Okay, on your first lesson, it's very difficult to understand like what we're doing here. It's like quite complicated, but all you need to know is to follow the doji, okay, and follow the 8 exponential moving average. The rule is if the doji is on top of the 8 exponential, you get out of the trade and you wait. If the price goes up, you can get back in the trade. But as soon as you see the doji, get out. Okay? When the doji went off, let's say you're in a downward trend, okay, like here, okay? Here we would wait. So here, the candle closed above the 8 exponential. This is a great example. What direction are you going here? Okay, so the candle, we're in a short, okay? The candle goes above the 8 exponential and closes above the 8. So the rule is when the candle closes above the 8 exponential, what do? We buy, is it? Yeah, we would buy if the next candle opened above the 8, but it didn't. It didn't open above the 8. This candle opened below the 8, so I didn't buy. No, it didn't. Oh, sorry, it did. Okay, yes. Okay, so here, okay, sorry, my mistake. So here it opened here and it closed here, okay, and you would have lost maybe a couple of pips. It's not 100%. Nothing is 100%, okay, but with 95% accuracy. So yes, you would get whipsawed out of this market a little bit, lose a bit of money, okay, wait for it to start trending. As I said to you, this one is horrible because it's in a sideways market. Do you ever trade in a sideways market? No. Exactly. So it was in that sideways market for like days. Okay, so we don't trade in a sideways market. That's why it's difficult to follow this. The reason I'm on this trade is so that I can show you what happens live on a 1 minute chart. So let's have a look on a 1 minute chart. Let me wait for it to fix. Okay, cool. So here again, we're in a sideways market. It had a little trend a couple of minutes ago. Now it's doing nothing. So we're below the yellow, which is the 34, in between the purple, which is the 50, and nothing's happening. Nothing's happening. So I can't even do an example here. So here, we're in a buy position. Okay, we'll do it on a 5. Okay, but even here, I wouldn't trade. Why? Because we're on a key level. Here it is, the 100. Okay, this is a key moving average. It's the 100. So here, we are above, okay, the 8 exponential moving average. We're still in a long position, but the problem is that we're on the blue 100. The further away you are from the 8 exponential moving average, the higher percentage that it is that it's going to come back and retrace back to the 8 exponential moving average. It's the craziest thing, but it does. So it didn't go through it. Could have gone through it, but why didn't it go through it? Because we're still in a bullish trend over here, although this is a short, just on this time frame I'm talking about. Okay, so here, it popped up, trended up to the Bollinger Band, came down all the way down to the 8 exponential. Now it's staying on the 8 exponential, and we don't predict. All we know is that we're staying long right now because the candle is above the 8 exponential. So we're staying long. So we'll stay long until the candle closes below, but there's a doji. So there's your signal. Out. There's your doji right there. So there's your doji. People got scared. Why? Because you're on the 100, and now we'll wait, and we'll wait and see. So if it drops below and the next candle forms below, we'll go short. If the candle pops up above the 100, then we'll go long. We don't predict. We just act accordingly. We watch these signals. When you see the signals, then you act. Okay. So there's your rule. I'll do it again for you. When you're in a buy position, when you see a candle, okay, you wait for the candle to close from a short. So you're at the bottom of the trend. Okay, you've seen the doji. You wait for the candle to close above the 8 exponential moving average. When you see the candle close above the 8 exponential moving average, that's when you get in. Okay, your next candle. So if you're on a 4-hour time frame, so let's say this was a 4-hour time frame. Okay, let's say that this was a 4-hour time frame and not a 5-minute time frame. Here the candle has closed. Okay, it's 12 o'clock, midday. Candle closes above the 8 exponential moving average. Here is your buy signal. You stay in. Okay? It doesn't matter that the currency has retraced. Where's your stop loss? Your stop loss is here. So you still got plenty time to play. Plenty place. Okay? Yes, you're going to be a negative. That's part of trading. When you buy a business and you buy stock, is all stock going to sell? No. Okay? So you're going to have some dead stock. Okay? So you bought here, price went up, and then it retraced all the way back, and now you bought in there, but now you're in a deficit position over here. So you stay in the trade. You stay in the trade until the candle, okay, closes below the 8 exponential. Then you know that the trade has lost momentum. And yes, maybe you'll make a mistake. It's part of life. Okay? Just like I've made a mistake. But I'm still in. And I promise you, all these reds are going to be blue by Monday. I'm going to make $500. I'm going to make 33% return on investment here. Okay, and it was. I mean, this went down to minus 200, minus 300 at one stage. Stuck in. Let me show you something interesting. You see anything interesting there? Oh, you can't see it. There's no stop loss here. I want no stop losses here. No, you can come and have a look. On all of my trades, there's no stop loss here. The take, not really. I prefer not to trade. I prefer not to trade, To be totally honest with you, I prefer not to trade. I make more money with my affiliate program than I do with trading. So I prefer, but it's for the people that don't have the money to buy the bot, okay? And it's a great skill to have. It's an amazing skill to have. It's lekker to know when you look at your phone and you know why the currency is stalled, okay? It's like, who's trading with me live? Doesn't it fascinate you when I post a picture and I say to you, this thing's going north, and it goes north, and how does he know that? Okay, if you look at all my pictures, okay, not once has it been wrong. It's right every single time. I know that the currency is going to do that. Why? Can't do it on Bitcoin so much, but on the other currencies, you can predict it. You can see what's going on. Just look at the other time frames. So if we go and look at, let's look at EG chart. 4 hour, right? That's where we are. So we're stuck on the purple. That's what's been happening. You can see for the last couple of hours on the purple, we've been up and down and up and down. We're very close to the purple over here. Now we've broken through the purple. Let's go to another time frame and let's find out what's happening on another time frame. Yeah, that's why it stopped. We're on the red, key reversal indicator, and we're in an oversold position. Okay, so we know that the price is probably going to come up. That's what the 1 hour is saying, and that's why the price has stalled. But I'm not trading on the 1 hour. I'm just understanding why the currency is behaving the way it's behaving. And it was behaving in the sideways motion because we were so close to the 200 on the 1 minute on the 1 hour chart. Now we've broken it. So we've gone down. But I'm not trading on the 1 hour chart. I'm only looking at this time frame for me to understand, okay, why the currency is behaving the way it is behaving. And let's see on this one. Doesn't tell me much. But I think on the other time frames, so even on the 15 minute, you can see here, okay, we're on a key reversal point, which is the 50 and the 34. So we know why it's stuck. It's not going anywhere. It can't go above because you've got all these orders, which I showed you in the previous one on Google, okay, that we've got all these orders over here. So when the price comes up, okay, there's more sell orders than buy orders, so the price carries on going down. I'm going to sell you something now. Trading is an amazing gift once you know how to trade. I don't want to trade because I'm not lazy. I'm tired and I want to do other things with my time. Okay, so a lot of people say, I don't trust bots, I trade manually. I said, but you're doing linear active income. It means that you work, you get paid. If you're not trading, you're not earning. You can't go on holiday. You're constantly watching your phone. I don't want that. Bot owners go to work and they print money. They're only watching their phone because they love it. They're addicted, like me. I'm constantly, my battery used to last me 2 days. It doesn't last me 4 hours because I'm constantly on MT4. How much did I make in the last 5 minutes? Who doesn't do that as a bot owner? Who is not addicted? Who is addicted? We have MT4 sickness. So, yeah. The only way to get ahead is to make passive income. Okay, you cannot save yourself to wealth. It's impossible. There is nobody that has ever saved themselves to wealth. What they have done is they have saved money, they have taken that money, they have invested that money in a passive income stream. Okay, that passive income stream has generated more passive income. They don't eat the eggs. They take those little eggs, okay, and they invest in another passive income stream to create more eggs. This is one of the cheapest forms of money creation that you can find. To buy a business, there is a huge barrier to entry. If you want to own any one of those big franchises out there, you know what you're going to pay. You're going to pay between 1 and 15 million rand for a franchise. Who's got 15 bars liquid? Who's got 1 million liquid? Okay, there's very few of us. So the barrier to entry is huge. Here is an opportunity. Even if you've got no money, I'm going to teach you how to trade for free. You're going to get a $50 account. You're going to work. You're going to learn on demo. Eventually, you're going to move over to a live account, okay? And then you're going to start making money. You're going to start, going into profit with your trades. Then you're going to buy the bot, and you're going to start making passive income. And so your life is going to change. If you don't get on the WhatsApp group and you don't get on the Telegram group, you will carry on with your existence exactly the way it is. Nothing will change in your life. The Forex market is the biggest industry in the world. The coffee industry is $8 billion per year. That's coffee. Okay? Travel is, I think 30 billion. Okay? This is $5 trillion per day. Per day. All you need to do is just a little bit. Use the bot and you get rich. Very simple. Not one bot owner has lost money on engineer settings. Not one. Come get rich with me. Change your life. Whether it's a business, a job, a franchise, it is modern day slavery. So let's get you free.